You are listening to Keystone's Stock Talk Show, episode 297.
If this is your first time listening, then thanks for stopping by. This podcast is produced every week for your enjoyment, and show notes are found at www.keystocks.com. Come back often, and feel free to add the podcast to your favorite RSS feed or on iTunes. You can also follow us on Twitter at Keystocks and on Facebook. And keep submitting your stocks via the usual social channels or at our website, keystocks.com, for our Your Stock Our Take segment. And we just might review your stock in an upcoming show and let you know if it is a buy, sell, or hold.
It's great to chat with you again. This week, Brennan kicks off the festivities reviewing an article he penned on small cap and other Canadian sectors and stocks that could potentially benefit from Prime Minister Carney's stimulus spending. Aaron takes us through the most recent tariff war news, including the 90-day pause between China and the US. Brett has a crypto market update, and I will review our star of the week, GeoDrill Ltd, symbol GEO on the TSX, an international gold driller, which saw its share price jump nearly 20% over the past week after reporting very strong Q1 fiscal year 2025 numbers, which bested all analyst expectations. The company also signaled the environment remains very positive going forward. All right, let's get to the show. I welcome my co-host, Mr. Aaron Dunn, the Killer Bees, Brett and Brennan. How are you guys doing? You have a good weekend?
You bet. Doing well.
That was great.
Good.
Happy belated Mother's Day to all the mothers out there.
Always nice to see your faces. Start of the week.
Well, yeah. We're recording one day later this week, and it's all Brennan's fault.
And it's thrown Ryan off completely. I think Brennan's going first this week with his segment, and that's actually not.
Yeah, take us through the poll, Brennan.
Yeah.
I got to say it once.
The poll. You got it this week, right?
Should I just get right into my segment?
Well, unless we've got something else to talk about, do we?
No, I don't think so. Okay.
Well, nothing in our lives are that interesting. So the Oilers won, Brennan.
I did note that.
The Canucks still suck. I got nothing.
They're golfing right now. So yeah, last week I wrote an article on small cap stocks and Canadian sectors that could potentially benefit from Prime Minister Carney's stimulus spending. And I encourage you to go over to the website and read that article. We'll also post the link to that article in the description of the podcast today. But I will just kind of briefly go over a few key points in the article on the podcast here.
Don't you refer to him as carbon tax Carney?
I do refer to him as carbon tax Carney at the end of the article. So you'll have to read through the whole thing to get there. But that is...
It's a treat at the end, right? Yeah.
It's a treat.
I'll let you talk.
So on the campaign trail, Carney's promises included $77 billion in new fiscal stimulus over 4 years, focused on increased defense spending, infrastructure projects, and new housing construction, alongside personal and corporate tax cuts. And we had a poll this week that went along with my article asking our listeners which sectors will benefit the most. And we had 70 votes, with aerospace and defense getting 11% of the vote. Infrastructure was the winner with 37% of the vote. Natural resources getting 23%, and other, where we were prompting people to comment, got 29% of the votes, with comments including clean energy and, funnily enough, the CRA. Now, I voted
the carbon tax industry.
The carbon tax industry. Yeah, mine kind of went along that way because I voted infrastructure due to homes and renewable energy. But I was a little surprised that natural resources beat defense spending by 8 votes. And just to go over a few of the points in the article, I wrote how Carney said at a Bombardier plant in Montreal, it's clear military expenditures will be higher than 2% of Canada's GDP in a few years, which would be up from 1.3% of GDP in 2023. And this could be an increase of over $25 billion in defense spending. And I cover a couple names in the sector which could benefit, including MDA Space, MDA on the TSX. We've covered them on the podcast before. And I also touched on a few names that we have under coverage. For infrastructure, he plans to build 500,000 new homes per year, which would be an increase from about 230,000 over the past decade, funded by 25 billion on Canada's balance sheet. And I personally thought of renewable energy being infrastructure, which is why I voted for it. As in Carney's book titled Values, he writes that the scale of getting to net zero is estimated at $2 trillion of new capital spending in Canada alone. Plus, his Liberal platform also promised to invest 2.5 billion in digital infrastructure like chips and data centers through the next 2 fiscal years. Now, for digital infrastructure spending, I'm kind of curious to see which stocks our listeners think would benefit. So I included a form in the article where you can submit a stock, and I will possibly cover it on the podcast in detail. Now, I didn't go too much into detail on natural resources, but I do discuss Enbridge's recent letter published to the new prime minister. I think that was on April 30th, which was signed by 37 companies in Canada's oil and gas space. In my opinion, with the carbon tax remaining, carbon tax Carney, and a friendly U.S. president to traditional oil and gas development, it will likely be hard for Canada to attract increased investment in the space, I would assume. So generally, please go out and check out my article. If you have any feedback or other stocks that you think could potentially benefit, which I do not cover in the article, send them over or comment on the poll question. And now I'll just open it up to you guys if you have any comments.
Yeah, I think it's a good place to start. Anybody who believes there is a sector, individual stock that we should take a look at that could benefit from some spending from the new sort of new liberal government that is in power today. I would say that most governments, regardless of their stripes, when they come in, they promise a ton of infrastructure spending. Whether it differs considerably, it may vary in the area they go down Avenue A, Avenue B. There's typically always a need and a thought for infrastructure spending. So we could see there. Aerospace and defense, it hasn't increased significantly under Liberals. It could be a change from a really low base. So, you could go to a higher base. And then there are some companies like, I think Brennan does mention Firan, a company that, we've recommended for, it's a part of their business is in that area. It's not the biggest part of their business, but I mean, again, you're buying a high quality business that has, again, the stock's gone from $1.30 to $9 plus. It's likely closer to fair value right now, but if you're looking 3 to 5 years out, Firan's a good name. It's done tremendously well. It could be. We're always looking for the next 10 bagger or 10x stock. Firan is now well on its way to joining that class of companies that we've recommended over the past couple decades. Anything further on sectors, stocks that we think might outperform?
And if I could just make a point on Firan there too, is that we've talked a lot in the current environment with all of the trade uncertainty about investing in companies that have flexible supply chains or customer chains. And I actually spoke with Brad, the CEO of Firan, when he was at the World Outlook conference in February, and he was talking to me about how they were able to essentially move a lot of their supply around. A lot of their customers were able to shift their supply chains as well to avoid a lot of not completely eliminate the risk, obviously, but avoid a lot of that risk, which you would think in aerospace would be higher. But there's individual companies and situations where they're more or less better positioned in this type of environment.
Yeah, it is impressive how, and we'll see how the year goes and what the tariff war or the tariff environment on again, off again brings. But Firan, for example, is one company that has been able to, again, we haven't seen a ton of quarterly time with the tariffs really invoked, but they have a more nimble supply chain than many do, and just in terms of production, where they can move production. So,
and on that note, what a nice segue
to
Mr. Aaron Dunn.
Mr. Aaron Dunn. What is he going to talk about?
We're at me
tariffs.
now.
It's true.
Yeah,
Brennan just cut that segment. We're done with that, eh? That was it. Yours is
Unless
over.
Brett has something else to say, but I hope people read the article.
You never know.
I could have something to say, Brennan.
Yeah, it's probably just despair.
But now you've cut him off. Aaron's coming in with Trump's tariff playbook so far?
Obviously, this is not my favorite subject to talk about, but I've spoken about it a couple of times before. Just informing people where we're at with the trade situation, because it's obviously so fluid and chaotic and just changing every day. And even the experts, I think, have trouble keeping up with what tariff is on who and what pause is in effect and which one isn't. So, a big news yesterday. US and China decided to put a 90-day pause on their tariff war, or at least most of it. But I want to break down what really happened in just simple terms so that we can really understand. So, of course, the background, how did we get here? Everybody understands the situation. Trump's Liberation Day tariffs, where he essentially put tariffs on every country in the world. China in particular got hit more than most countries. China retaliated, which is typical in a trade war, which led to higher tariffs. So where were we at? About 145% tariffs on goods imported from China into the US, and then China retaliating with 125% tariffs on goods from the US. The escalation and fallout, of course, it went beyond just tariffs. China also launched some other initiatives as well, and one of the most interesting here was the export restrictions on rare earth minerals. So, of course, rare earth minerals are incredibly important for a wide range of critical industries, from transportation to defense to technology, and China dominates that market. They own about 90% of the processing, I believe about 70% of the production. So they essentially put restrictions on rare earths going into the US, which the US does have stockpiles, but over time that would be considered to be a significant national security issue if the US was not able to replace those. The business uncertainty, the market uncertainty, obviously big drops, volatility in the S&P 500, and lots of alarm across the board. But what happened on May 12th? It appears that China and the United States had some discussions which may have been productive. We will see. They decided to put a 90-day pause on their tariffs. So the US tariffs dropped to 30%. So this is the 10% baseline. Plus there's some other 20% fentanyl specific levy as well. China is reducing theirs on US goods down to 10%. So it's not a complete pause, but it's a significant reduction. China ends the other types of retaliation, like the export controls on rare earths, but ultimately no other structural reforms agreed to that we can see right now. And this is just a 90-day pause to be reassessed after, essentially. So the market's reaction was positive. The S&P jumped 3.3% on the news. Temporary relief for multinational companies from the US, also any retailers with China exposure. But analysts saying that this is really a sigh of relief in a very stressful situation, as opposed to any type of a turning point or long-term solution. So the businesses remain cautious and the uncertainty continues to be there. Now, when we look at the reactions from media outlets, it's pretty predictable, actually. Media that's on the right side is calling this a historic trade win, when media that is towards the left side are saying that Trump has backed down and shown weakness. But really, I want to know what actually happened. So what did the US actually win? Like, what did they actually gain? From a perspective of, what did they get that they would not have had if they did not start the trade war in its current state in April of 2025 with the Liberation Day, when things really escalated with China? So from what I can tell, no new concessions beyond reversing the tariffs that were already applied after the April tariffs from Trump. I don't see any structural reforms being guaranteed from China. One possible way you could say that there was a win would be the fentanyl specific tariff, which remains in place, 20%. So the tariff on the US it continues to be higher than the tariff that China has on the US. US is applying a higher tariff. But without the April tariff hikes that the US engaged in, that Trump began with the Liberation Day, there would have been nothing to pause or essentially win back. So at this point, I don't really see anything that the United States has gotten that would have been pre-tariff war, that they didn't have pre-tariff war. So, but of course, negotiations ongoing. We will see. A lot of the things that I'm seeing in terms of people that are saying that this is a win, they might point to the market reaction. Yes, but the market is still actually down since Trump became president. So, this is really just recovery from volatility. I wouldn't point to that as this being a major win. Other people are pointing to things like, China reduced the tariffs, but those tariffs were only in place in response to the tariff war that was started in April. But we will see. Obviously, it's a very fluid situation. Things change on a daily basis. But really, when we look at Trump's playbook so far, it seems to be coming out hard, escalating things really quickly, sparking a retaliation, causing a lot of concern, and then brokering some type of a deal. And the focus of the deal largely seems to be whether or not a political win can be claimed in the near term, and whether or not there is any long-term benefit to that deal over and above not starting the fight to begin with is highly questionable, and likely the focus is more on the short-term political wins. But then the markets bounce on the de-escalation, and you claim that as a win. So we're just looking here at how things progress over the next couple of months. But as we've said before, there are companies that are better or worse positioned in this type of an environment. Really the situation that companies face is complete uncertainty in terms of shifting tariff regimes and what type of retaliation. So one of the things that Trump has said is that he wants to bring manufacturing back to the United States. That's what he's claimed. So if there's big tariffs on companies that are producing in, say, China, they can reshore that production in the United States. They can avoid those tariffs. Now, some companies, no doubt, are willing to do that, but there's a long time horizon. It takes years to do that in many cases. It's extremely expensive. And when you have a situation where tariffs are on and off, there's pauses, there's agreements that are kind of agreements, but they're temporary. Nobody wants to make any adjustments because you don't want to have to go through the expense of reshoring your manufacturing to the United States just to know in a couple of years that the tariff war was resolved and now the tariffs are not in place, or they're not as high as they were. So this is the situation that that businesses are unfortunately having to deal with. Strategic planning is extremely difficult when you don't know the environment that you're operating in. If there were 145% tariffs on China, but people were confident, or businesses were confident that that was the new normal, then they have the ability to adjust. But it's extremely difficult to adjust and adapt in such a volatile environment. But more news will be coming shortly, I'm sure.
Yeah, I just think that it's, interesting how we saw him come so hot out of the gate. Kind of same thing back in his first term. I know Brett and I have talked about this a little bit before. And it's like you can almost just like read Trump's playbook now. It's, comes hot out of the gates and then kind of, eases off a little bit. And does that put you in a better, bargaining position? Maybe, but I don't know. I think there's a debate around it for sure.
Yeah, and I think, the key takeaway would just be the environment is so uncertain. It's hard for strategic planning. At some point, that's got to lead to a pullback in CapEx, which leads to, likely some weaker quarters coming up in some segments.
There could be an argument that creating the chaos is good for Trump politically, because with chaos, everybody's confused, and there's maybe there are opportunities that open up for him. But in terms of being good for the United States overall, I don't see how turning the entire world against you will do that, and creating, such lack of confidence in being able to do business with you in a consistent, predictable way would do that.
Yeah.
Yeah. So a couple of things. So last week I did mention, actually, my prediction was they were just going to keep doing these 90-day pauses when I was going over the shipment and stuff. So I got something right for once for those throw predictions.
A broken clock, right?
It happens. It does happen.
I don't know. He's the reigning champ of the prediction
I don't think that's going to happen this year.
Well, one of my predictions was that Elon Musk would be out of the government by the end of the year, and I think that he is, right?
Yeah.
was my understanding, although I can't.
Far less sightings of him.
Yes.
Less
Go on, though,
sightings. But the other thing on the CapEx, you're not American labor isn't competing against Chinese labor. It's American infrastructure and technology and automation competing against Chinese labor. So even if you do get this reinvestment back into the US, I don't think those jobs are going to come roaring back. Because right now you don't even have Americans wanting to fill those jobs.
Those aren't the jobs you want, right? Like that's the whole thing. It's crazy.
It doesn't make sense for companies to pay American wages over Chinese wages or Southeast Asia wages. We've seen a lot of the supply chain move into other Southeast Asian countries, even prior to all this over the past 5-6 years. So I don't think we're seeing this structural shift back to American manufacturing like Trump and what he's campaigned on at this time, at least. Maybe a year from now, if he really does step on the tariffs, but he seems to be pulling back. And I think we are just going to keep seeing these 90-day pauses or so on and pick out whatever win he really feels like at the time. If it's the S&P going up, 3-4% on the removal, that's a victory enough. If that's politically convenient, that's where we're, I think, heading.
Well, if you crash at 25% and then it pops up one day 5% and you claim that as a big victory, right? That's,
exactly.
That's kind of an exaggeration of what we're looking at here in some ways.
Politically, that position likely helped the election, so him getting elected. So, I mean, if that's your goal, rather than really good governance and policy, then you got what you wanted in that respect. But it's very interesting times. There certainly have been some opportunities over the last month and a half to buy some high quality companies. Like we brought a company into coverage that we've been looking at for several years that came down into a range that and now the stock's up 30+%. Just a pop up over the past couple weeks after really strong earnings that drove the company higher and the market settled down. And that's what we're able to do, is take advantage of some of the weakness and add some, new clients that have came in, got to buy some great companies this year that were 30% off, at one point, where they wouldn't have been able to. We had historically high valuations at the start of the year, so you were able to buy. And now again, the markets have crept up. The valuations are higher again. So we'll be a little cautious in the near term, given the environment. Now valuations are higher, but there's some individual stocks we'd buy. I'm not sure if I want to buy the entire S&P 500 right now, after you've had a peak up or a perk up in the
recovery.
Recovery. That's what we've had for sure. All right, I think that segment, we've put that to bed. Let us move on to another market segment, the cryptocurrency or crypto market. Brett's going to have a quick update on some of the goings on there. I think you're even maybe going to touch on a takeover in that market in the Canadian.
Yeah, we got a takeover, got a introduction to some index, and really it's just more, because we've been seeing a lot more interest in the crypto market again recently. I've covered it previously and obviously companies, but we haven't really looked at it in a while. So just going to look at really a few news articles, what's going on, really what's happened within the space over the past 6 months or so, and just some of the couple recent things. So Bitcoin is currently hovering about 104K. As always, that by the time you're watching, that could be significantly different. And that's just below really the all-time high of 109K set earlier in the year. But it has effectively recovered in US dollar terms. That is, since the tariff decline, it went as low as I think about 70K intraday or intraday trading. And I will also mention, which is why I was bringing up predictions, is one of my predictions was Bitcoin will hit 130K, but then end the year lower than 100K. 130K will hit, then end the year lower than 100K, but that hasn't happened yet. Whether that will or will not, we will see for the remaining back half of the year. But Bitcoin, just as a whole, I will mention, has been performing better than the broad crypto market over the past really 5-6 months since the start of the year. When Trump got elected in November, we saw a really big bump in altcoins. So your Ethereum, your Solana, your XRP, and your Cardano, especially XRP. You saw a big bump right on his election day. But then since then, they've really underperformed Bitcoin as a whole. And the market's really just seen the Trump presidency as a boon for cryptocurrency as a whole. We've seen the creation of the strategic Bitcoin reserve, the digital asset stockpile, as well as just general deregulation and clearer rules as a whole, which was a really big issue over the past 4 or 5 years within the Biden government, and even prior in the Trump government, his first term, was crypto industry regulations just were not clear in the US. They were clearer in Canada, clearer in Europe, but in the US, they were really unclear who was even regulating, what rules you had to abide by, and they were just inconsistent. And now there's really a change of pace. There's a bit more clarity. And Trump's really has signaled the US is the pro-crypto market of the world, and financial markets as a whole, traditional financial markets are now really jumping on any opportunity to really capitalize on that change. So today we actually saw one of the largest cryptocurrency companies, Coinbase, symbol coin, or COIN, and I believe it's on the NASDAQ. I did not write that down, though, being added to the S&P 500, the first crypto company to be actually added to the biggest index in the world, or the most influential index. Coinbase, if you don't know, it's a cryptocurrency exchange with $393 billion in quarterly trading volume, $328 billion in assets under management. This change of the company being added to the index is really a change of pace, and for the industry, as the world's most popular index, will add significant passive fund flows into the company. Index investing, passive, or even if it's a active management, really benchmarking against it, is really the opposite end of the risk spectrum in equities to the crypto market. So you have your passive investors versus something high risk like crypto. So the inclusion of Coinbase to the index will cause investment from an investor class that really hasn't touched the company or industry before. So I would not be surprised if we see significant capital flows that weren't happening before into the company, as well as just industry as a whole. On the news, Coinbase shares were up over 20%. The company was one of the largest companies not to be included in the index prior to this. With the market cap of the company putting it would be roughly in the range of 150th to 160th range in the index, so the top third, or nearly the top third of the index by market cap. This is really just a boon for the company and the industry as a whole, because it just will cause more funds to flow into the industry, but specifically in Coinbase at this time. And we'll really see how that progresses if we start to see more cryptocurrency companies and crypto-related companies become in index products. We saw MicroStrategy, I believe, earlier in the year. They're now in the NASDAQ 100 as well. So we'll see if that's a continuance or if it's just these few. Another news item, which this is the one that Ryan was alluding to, is WonderFi, symbol WNDR, on the TSX, a Canadian cryptocurrency platform we've covered before, and notably, it is marketed by Kevin O'Leary, is being acquired by Robinhood for 36 in all cash, 36 cents in an all cash transaction, a 41% premium over the prior close. Robinhood's symbol HOOD is an American-based trading platform for equities as well as crypto, but it really started its place in equities, and it's really known as well for that commissionless trading of stocks, and that really actually pushed the industry as a whole, especially in the US. But you've also seen now in Canada with like Wealthsimple, I believe Questrade's also zero commission, or at least for some of their products now. And I think Robinhood really pushed that forward. But moving back to WonderFi, we've covered WonderFi before, and it's just generally had, frankly, poor fundamentals and poor financials as a whole. There's been a couple quarters where it looks a bit stronger, but then it quickly reverts back. And all that's just due to crypto market volatility. If you're comparing quarter over quarter in such a volatile industry, you should have a good one. If you are not, you are doing it wrong completely. Even if it is a poor business, you should have a good cherry-picked quarter or two. The acquisition, though, it seems like it's a really strategic fit for Robinhood, as it's been looking to expand into Canada as well as just internationally in general. So it'll be interesting to see what they do in the Canadian cryptocurrency market, as it's not as developed as an exchange, as far as exchanges go, as the US, at least by size. And next thing I want to move on to is likely not the next corporate or company really acquisition or merger or anything like that, but it shows the likely continued Trump support for the industry. American Bitcoin really ran by his son, Eric Trump. And it's the Eric Trump's and the Trump's family's Bitcoin mining company. The assets, this is a recent development over the past, I think, about 4 or 5 months now, is the assets are actually carved out from Hut 8, which is a public crypto Bitcoin mining company, energy infrastructure. And this now combined company will be going through an all stock merger with Griffin Digital Mining. and it's expected to close in Q3. This is further adding more crypto exposure to the Trump family, and that joins World Liberty Financial, and of course, I think this is Ryan's favorite, Trump Coin. The resulting combined company will initially be owned 98% by the Trump family, but likely over time that will come down as they sell their shares or shares are issued through the company's own operations. Obviously, this further aligns the Trump family's financial interests with the appreciation of Bitcoin and just the crypto market as a whole. So overall, Trump and his family have a personal financial interest and have already put out really supportive policies and regulations for the industry to really go forward in the US. So likely, I would say the policies are even more so likely to be continued in the foreseeable future under the current government, as he does have that personal financial interest. And of course, I can't have a crypto segment with talking about how risky it is given the current environment. We're really seeing that like pump up environment again a bit more, which is always a concern when it comes to crypto that has this very big boom and bust cycles. And I expect we're likely just going to continue to see a surge in crypto products and securities. And this time, more so different than prior crypto cycles, is more of an emphasis on public markets in the near future, especially in the US, as we are seeing these deregulations, the clearer regulations as a whole within the US. So to highlight the risk, I just want to go over Alex Mashinsky, the man behind the Celsius fraud, has been sentenced to now 12 years in prison. The company fell apart in 2022 when withdrawals suddenly stopped. And Celsius was it was a bank. They would always try to emphasize themselves as they are not this anti-bank sentiment, and unbank yourself was their slogan. But in reality, they were acting as a bank, and worse off, they were acting as a fraudulent bank. So the company initially with the fraud, it had a deficit of 1.2 billion assets were missing from the company's balance sheet. And then as a result, the initial claims by creditors in bankruptcy documents was 4.7 billion, just to give you a scope of size. This wasn't some small edge case. This was a big deal. When I was looking for a picture of Mashinsky, I came across some Reddit posts from 3 years ago and people were saying, oh, it's not a bank. And then 3 years, 4 years later now, very different than what the sentiment was for something that is obviously completely fraudulent now. And the reason why I'm bringing this up is, if I am correct and public crypto-related companies really do surge, many investments will be poor, like WonderFi has been for most of its investors. If you are timed the market perfectly like you can, say with any asset, you made money. But for most investors, it was poor. Or potentially there will likely be downright fraudulent scenarios like Celsius. I don't know how much that will make it into the public markets, especially larger public companies, but I would not be surprised if there was a degree of that leaking in the public market. Simply, if you are looking at any crypto-related investment, make sure it's money you can afford to lose. Make sure you know what you are actually investing in, as some of these products are extremely complex on purpose just to make it so you don't know what you're actually investing in. And that's how I'll close off this segment.
Yeah, I think that it's good that Mashinsky, was brought to justice. But it's interesting. I think you kind of like mentioned it briefly, but the U.S. is deregulating in the space, and they ended up disbanding the Department of Justice's National Cryptocurrency Enforcement Team, and Scott Bessent had said, we believe that the United States should be the premier destination for digital assets, and that's awesome. But again, I think that regulation and protecting some of these people that are buying, might have to bleep this out, a shit coin. I feel like investors or speculators should be protected to some degree when it comes to these frauds, or a lot of them are just downright frauds. And at least going after the people who are starting them. I think that's important.
Be the primary market for it, but have good regulations so that everybody can have confidence in what
exactly
anybody's buying. Or I don't know if you're investing in it in some cases, but what you're buying, have some confidence there is some regulation. I mean, it's not a market that started yesterday, but in the relative scheme of markets, it's a frontier market, and that can be wrought with fraud, and it can, that's why you need regulation. be a leader in the regulation as well as a leader for innovation? Can you do both, right?
Yeah.
I'm not. Yeah, we'll see how that works out over the long term.
Yeah,
Like
that's
Brett.
I think you might be bringing up the same thing, but I brought it up to you before how crypto fraud has just become so automated over the past couple years now. You have websites like Pump Fund where it's just effectively what are called rob quotes. So it's just pump and dumps over and over again, times 1,000 and thousands of these. It's not just a one-off. It might be only a few $100s for some, but then some are tens of thousands or even millions of dollars. And this is just happening repetitively every single day. I'm sure one has happened during our recording of the podcast. And like that's where regulation needs to step in. And right now it's not. Prior, you had really confusing rules. It just did not make sense logically in the US. It was very inconsistently applied. You have people really look at the XRP case where it was inconsistently applied there and really stuck in hiatus for, I think, 3 or 4 years because there wasn't clear rules. Hopefully proper regulation gets in is really all I can say.
Yeah. And like one thing you had mentioned to me the other week is you're like, I have no problem if someone wants to go speculate on, some like investing in some technology, but the amount of like fraud coins that will attach themselves to an influencer and then like Brett said, just rug pull basically, just sell, after a pump. It's a dime a dozen. There's tons out there. And, I think that, those people should be protected to some degree, or again, at least coming after the people that are, starting these things.
Well, you want to support a fair and transparent market based on rules, right? And as Ryan said, it's great that they want to be the leading market for digital assets, but I don't know. There's no example of a leading financial market where there is no regulation. I mean, you obviously you don't want an overly regulated market, but you need an appropriate amount of regulation so that for example, so that like in our business, equity research, you want to know that financial statements are audited or there's some type of a standardization in terms of what certain things mean and how things are reported, right? And without that, you couldn't conduct research. And it's the same for any market. It's the same for any industry. Having a set of standards, rules that are enforced fairly and evenly is required for people to be able to interact with each other and engage in commerce.
Yeah. Agreed.
Okay, well, that'll close off our crypto update for this week. I'm going to share my screen and I'm going to talk about a company that should be no stranger to investors as it's been in coverage in our Canadian small cap research for a number of years now. Okay, so GeoDrill. Now, what does GeoDrill do? They're a leading drilling company with a large presence in West Africa and an emerging presence in Latin America. The company operates a fleet of multi-purpose core, air core, grade control, and underground drills. Its total is about 98 rigs or units right now. The company's multi-purpose rigs can perform both reverse circulation or RC drilling and diamond core drilling and can switch from one to the other with little effort or downtime. Multi-purpose rigs provide clients with the efficiency and high productivity of RC drilling and the depth and accuracy of core drilling without the need to have two different drills on site. GeoDrill currently has operations in 4 African countries and 2 South American countries. The company's rigs are support equipment also incorporate a fleet of booster and auxiliary compressors, which enable the group to achieve high quality sampling and operations to greater depth. Stock trades around $3.30, has a market cap of around $155 million, doesn't pay a dividend, may at some point in the future. But why is GeoDrill our star of the week? Well, up nearly 18% over the past the past week. I'll get into what drove up the stock in a second, but the stock is also up around 43% over the past year, and it is more than doubled since we were able to re-recommend it over the past 18 months to clients. Now, okay, let's take a look at the strong Q1 fiscal year 2025 numbers that were just released, which are driving the stock higher at present. Basically, record numbers across the board, generated record revenue of $48.8 million. That's 41% increase from the same period last year. Delivered record EBITDA, $13.6 million or 28% of revenue. That's 104% increase over Q1 2024. Adjusted income or net income was the achieved net income of about 5.6 million, 12 cents per share, up from 4 cents in the same period last year. So very strong growth there. And they generated a return on capital employed, or ROCE, of 18%, return on equity of 10%, reflecting strong capital efficiency and profitability. Let's look at some more highlights from the quarter. Utilization was very strong at 75% on its enlarged fleet during the quarter, compared to around 65% in the same period last year. They strengthened their operations in West Africa and Egypt, repositioning rigs for continued growth, expanded presence in South America by adding additional rigs to meet strong customer demand in that market, increased the rig fleet to 98, adding 3 rigs during the quarter. Let's look at the balance sheet quickly. About 13 million in cash. Debt is about 13.7. It's a strong balance sheet, particularly compared to its peers. Likely moves to net cash by year end, pending demand and adding additional rigs, depending on the movement of that over the course of this year. What is driving these results? Well, strong new contract wins with top tier clients is driving revenue. You see 150 million in US and multi-contract wins over the past year. Significant wins. As you can see there, from some of the bigger names in the industry, the most well-known names, the Newmonts, the Barracks, the Endeavor Minings, a number of companies there that should be familiar to anybody investing in the gold segment. Let's look at the company's guidance or outlook here. Demand for services remains strong despite tariff concerns. Strong gold and copper prices continue to fuel demand for drilling services. The company primarily drills for gold. It has a pipeline of bidding, and that remains very active. On the conference call, I'll note that management stated it expects Q2 2025 revenues to be roughly in line with Q1 2025. We just saw those numbers. They were very strong indeed. Now, let's take a look at the current valuations for the company. As we can see here, 3.5 times on an adjusted basis, EV to EBITDA, based on the 2024 numbers. 2.8 times forward-looking. PE right now about 12.3. If we look at the 2024 numbers, look forward, it's as low as about 7.3 times. Our conclusion here, that record Q1 fiscal year 2024 results, they were driven by strong gross 28% and EBITDA 27% margins. A strong gold pricing environment continues to drive demand for drilling services. Again, they drill approximately 95% of clients that are exploring for gold. That's who they're drilling for. They continue to reinvest cash flow to grow its fleet. About 3.6 million of CapEx in the quarter, which expanded to 97 rigs, up from 93. It has 1 rig being rented right now. That gets you to about 98. Management again noted on the conference call that it currently sees the reinvestment of free cash flow into the business to be better able to use a better use of capital versus dividends or buybacks, given the demand that is facing that it sees in the near and midterm. We may see a dividend at some point return, but in this case, again, the better use of cash flow is to plow it back, buy more drill rigs, and get those deployed. Demand remains strong across all its main geographies, including South America, West Africa, that would be excluding Burkina and Mali, and Egypt. The company aims to continue growing its fleet across its geographies, expecting to cross the about 100 rig mark in the near term. GeoDrill has also recently established a company in Saudi Arabia with the intention of tendering new contracts in 2025. I'll close by saying clients will be updated shortly with our updated rating on the company, and there are final disclosures.
Yeah, the utilization with GeoDrill is always nice to see with the business. And exactly, I remember our
Very
previous
strong,
conversations with management, and, when utilization's, getting 75% or higher, that's when they're going to be, trying to add some rigs. Kind of in that range.
You're very profitable if your utilization is 75%. And you saw the uptick in EBITDA margins across the board, profitability. Even with the top tier clients that they have longer term contracts with, the margins came up, and you can see that when you have good utilization. And it's impressive profitability. And again, really for us, if you're buying drillers, it's the pick of the litter in that sector because of the balance sheet strength and the margin profile that we see that this company is able to generate. That quarter was strong. If they have another strong quarter, despite the growth in the share price, it looks like, it still continues to offer some value. Again, that's against a strong gold pricing environment. If that changes, the company has some cyclicality for sure to the business. You got to continue to watch that.
Yeah.
All right. I think that's going to end our show off this week. You guys got nothing else, right?
No.
Good. Okay. Well, if you are watching this on YouTube, smash that subscribe button. If you're listening to this wherever you consume your podcast, rate and review us. And as always, I'd like to wish you profitable investing. Thank you.
Thank you.
Thanks, everyone.
Thank you.